The White Bear Area Chamber of Commerce and On Location TV19 are proud to present Your Business Matters, dedicated to your business needs. The White Bear Area Chamber is a nonprofit business organization serving as an advocate for the White Bear area and its business community. Now here is the Executive Director of the White Bear Area Chamber and the host of Your Business Matters, Tom Snell.
Hi, I'm Tom Snell, Executive Director of the White Bear Area Chamber of Commerce. And first of all, Happy New Year to everybody and welcome to Your Business Matters. Today our guest is Tom Brand from EdwardJones, and we're going to talk a little bit about where we see the market and the economy going through 2013. And thank you for coming to our program today, Tom.
Well, thank you very much, Tom. It's a pleasure to be here. Thank you for inviting me.
Yep. Just going to start out talking a little bit about your background and a little bit about what EdwardJones is. And then from there we'll go into some discussion about where we see the stock, potentially what might happen in the stock market and the economy since we're going into a new year. I think our guests would be interested to hear about that. So Tom, a little bit about yourself and your company. Where are you located, your business?
My office is located on Highway 96, just east of White Bear Parkway, in the Birch Lake Professional Building in White Bear Lake.
Okay, and what is EdwardJones? That's what you work for. You're a proprietor for EdwardJones, right?
Yes, I work for EdwardJones. EdwardJones is a little unique. We put offices out in neighborhoods. We're very community focused. And so when you see an EdwardJones office, we're all work for the company. We're not an agency, as you might think about with life insurance companies, say, for instance. So we do work for EdwardJones, but rather than put offices in downtown, say, in a skyscraper, we put offices out in neighborhoods and in communities, and that's part of the way that EdwardJones has done business from the beginning.
Okay, and how long has the company been in existence?
The company's been in business in the 19-teens, and early in their existence, they acquired another firm, and the firm they acquired was started in the 1870s or 80s. I'm sorry, I don't even know when. So it's common when firms acquire another firm to use the date, the oldest date of any firm that they acquired. So technically, back in the 1800s, but as a matter of practicality, EdwardJones started in the 19-teens.
And when does your company give people a venue of where they see the market going so that you get an idea about what might be happening in the stock market, for example, or the economy? Do you get information like that, or do your clients get information like that?
Yes, we do. EdwardJones employs a lot of analysts to analyze companies and investments, and we offer commentary such as you speak. We're very careful, though, Tom, to be crystal ball people. We really want to prepare the investor for any condition that might take place in the environment. So what we'll find from EdwardJones is we'll try to be more prudent and measured in our advice and our analysts that we provide. Okay.
Now what I wanted to do is a little bit about yourself. What's your education background, for example, that you have?
I have a master's in business administration from the University of Minnesota.
Okay.
And I've had interests, multiple interests in the past. I aspired to go to law school at one time and didn't. But the thing about the financial services industry that appeals to me greatly is that it's principally a service business. We serve the long-term investor, and that's what we do at EdwardJones. And we help clients and get to know them and help them to accomplish their goals. And that's the part that I find most satisfying in working in this business that we're in. So
is this your first business venture where you're out on your own doing your own business, or have you done other types of business ventures prior to going into EdwardJones?
I've done other ventures, Tom. With my master's degree, I worked in the industrial sector in product marketing for many years. And that particular companies in the 90s were getting more and more global. And I was looking to really work more in a community and work more in a relationship way rather than in a broad marketing context over a lot of different markets. And so I did make a change in the early 2000s, and was doing some consulting and also started my own business, but was looking for a business model where I could work for a nameplate company, a blue chip company, but also have some sense of entrepreneurial spirit. And Edward Jones has that peculiar model with the people that work for Jones. And Edward Jones really seeks out people with an entrepreneurial spirit to head up their branches.
And what would be some of the entrepreneurial things that the company looks for? What kind of person are they looking for? Somebody that has strong sales and analytical skills, or somebody that can analyze the market? What exactly does Edward Jones look for people to head up their offices?
Edward Jones really is looking for people that want to serve people. So when you bring up are they analytical or sales ability, it would be more the latter, Tom, really looking for people that want to engage with people and help people. Edward Jones employs a lot of analysts, so the research and the knowledge, all that is there, really looking for people that are driven to serve others, that can take that knowledge that our corporation has and put it to use for people. And we look a lot. We're looking for women, particularly. There's very much a growing segment of women that are investors. We look at ex-military people that are involved in a very disciplined.
They're highly focused.
Very highly focused, very disciplined. Yeah.
Right.
But it's a people business at the end of the day. You know, we serve people, and if you're driven to build a business and want to have a sense that you kind of own it and that it's yours, people that desire that kind of independence but yet are driven, Edward Jones would be a good opportunity for someone like that.
Now, I want to go on a little bit to what's going on in today's marketplace, and I'm not asking for advice because everybody has different levels of what they're looking for in the market. You know, some people are more conservative and some are greater risk takers, so didn't really want to go into discussions about what a certain type of person should invest in. I want to have this more of a macro type of discussion on what Edward Jones thinks might be going on in the economy, and maybe what some of your own perspective, if we could take a look at it. And but I will bring up a couple of items that have been coming up in the news lately, as far as where you hear about investing in certain types of service products, and I did want to see if Edward Jones could give some enlightenment on that. And first of all, we just got through the fiscal cliff, and so I saw today before you came in, as I mentioned, that the market is going up. I mean, right now it's up about 300 points, I think, the last I saw it. But we still have 3 or 4 more of these things to have to go through. And looking long term, and by long term I mean 2013, what do some of your analysts see happening in the stock market and the economy with these things happening, and how do they look at some of the actions that Congress and the President will be taking? We have the fiscal cliff, and we've got the what do you call it, the where we have to sign off on the spending for the country, and then some other things that are happening even after that. It's a long question, but maybe you can kind of dig at that a little bit.
Sure. Start with the easy questions first, right, Tom?
Yeah, the hard one there, yeah. Okay. Yeah.
Well, it's an important question, and certainly one that's on everyone's mind. I think it's important to distinguish where the long-term value in, say, the stock market, and we'll just talk stocks because that's fine for the moment here, where the long-term value of stocks is derived versus all the short-term little hiccups that affect the sentiment or people's emotion about it, but really don't really reflect the value of, say, Target stores or Pepsi and Coke. And so the fiscal cliff or the debt ceiling really isn't going to in any real way devalue good companies, because the value of a stock is really depends on the predicted future earnings of the company,
and not on people's emotions, but on what the company we'll be doing in the future then.
That's right. That's right.
Oh, that's
Tom.
interesting. Yeah. It's
So
interesting
I think
for-
we really
yeah.
distinguish between a maybe one way of thinking about this
Mm-hmm.
is there's a difference between maybe a trader who might want to buy something and sell it right away, and an investor, somebody that has truly sold that company X is a good investment and hold it for the long term. So at Edward Jones, we're very much biased toward the serious long-term investor.
Mm-hmm.
And so that investor, that person who's invested for many years, will have seen many of these types of hiccups. If they weren't precisely called the fiscal cliff, they were other events from the past, whether they're, hostage was taking or Gulf War breaking out or a Black Monday or all these negative events that have happened in the past, and we've seen that markets have returned. So I think it's important to know that with regards to stocks in particular, it really is more what we call fundamentals. That is, how much money is that company making?
Sure.
How sound is that
Yep.
company? So I think that it's important to not have particularly a lot of the political sentiment affect the investors'
Okay.
decision about the investments that they're in.
So they look more at kind of a long-term thing. Now, what is Edward Jones saying about the economy? Do they expect us to go back into another recession, or do they expect modest growth? What are some of the indications that they see for 2013?
Edward Jones analysts see modest growth in the economy. I think that there's really no area in the economy where there's what we call asset bubbles. You recall in 2007
Right.
when housing was running,
boom,
in excesses.
and
There's really not. So when we get into a bust or a recession, there's generally some excess in
And
the
a bubble
economy.
means, and just for the people, an asset bubble. What does that mean exactly?
Well, an asset bubble just means that an asset is overpriced. People are just paying too much for it. So we can recall the housing bubble, and people were feeling wealthy because their house was worth more than they paid for.
So it's like when back in the 70s, when I bought all these silver dollars and put them under my bed at $50 an ounce, and they went down to $5. That would have been an asset bubble, right?
Yeah, that may have been.
Okay.
Now sometimes assets can go down, for different reasons, or
Yep.
go up. But when it's affected by the demand or by psychology, and there's no fundamentals, underneath that. And so we don't see in the economy right now really a lot of excess to wring out. And so the economy's been slowly building at very, very modest rates. And I think given all the pluses and minuses, Jones sees really kind of a similar thing going into 2013.
Okay. So modest growth in the stock market then, probably.
I think we do see that. When we talk about investing, of course, we have the stock market, and we also have the bond market, which a lot of people, when they talk about markets, just talk about, or they think about stocks, but of course there's bonds out there too.
Okay.
And what we see is that we're in a period of historically low interest rates.
That's right, yep.
And so what that means is that bonds are relatively expensive, because bonds run opposite of interest rates as far as their valuations are concerned.
Right.
So historically speaking now then, because interest rates are at a low, bonds are historically high in a relative sense.
How about the people that are saying that our interest rates are going to spike because of the debt? Is there any validity to that? Because of the national debt is like $16 trillion or something. Do they see any potential of a big spike in the interest rates next year because of that?
Well, the interest rates are being managed by the Fed, and they're keeping them artificially low, and say that they're going to until 2015. And the Fed has proven to be very effective at at lowering interest rates. And so when they get to a point where they're allowed to rise, they'll rise at a controlled rate. So I think there's some reasonable confidence in the monetary levers that the Fed has to control that. The other thing, I'll point out on the deficit, there are a lot of people that are creating a lot of fear about our deficits. And yes, they are higher than average, but there are examples of other countries that have had higher deficits that have over time lowered it. Yeah,
okay.
Our neighbors to the north, Canada, for instance.
Canada?
10 years ago, they had very high deficits, and they've managed over 10 years to lower them.
Canada had a higher percentage deficit. I mean, maybe not as much money because they have a much lower population.
Yes.
But Canada actually had a high deficit.
Yep. Our deficits, normally they're measured, your deficit as a percent of your economy. And in just very rough terms, if I'm recalling this right, we're 65%, 70% debt to our economy. And Canada was up in a similar range. And this is the range that Western Europe is at now. But up until a few years ago, we were down at 40%, just in rough terms. And Canada's there now. So I think that we've had this little spike since 2011 and all the stimulus programs. I think there are a lot of people that will look at a short-term trend and then project it like it'll continue on in the future. And I think that really it's not necessary that that's the case, because we do have power to take some actions. Now, one can have confidence as to whether we will or not, but it's still something that would be reversible.
And I would imagine as the employment picture gets better and more people are at work paying taxes, that actually the deficit will go down a little bit, because there's more money going into pay taxes from people when they're working.
Well, that's right. I mean, there is in some ways some potential for us to grow out of this. Now, one can argue whether we will or not, but that's certainly some potential. So I think we have to understand that the economy is dynamic, that it reflects, it's a social enterprise. It's really the summation of all the interactions we have as human beings with one another, and it's a very dynamic thing. And it ebbs and flows, and things rise and things fall. And so certain trends, directions don't go forever. Eventually things turn around, or, so there's always these kinds of peaks and valleys and troughs, and that it's just a reflection of something much deeper. It's a much deeper dynamic, really, than people presuppose by just simply making some projection in the future. So we try very much to provide that perspective so that investors aren't investing from fear. Now, we want to invest from knowledge. We want to invest from a more goal-centered approach. What are we trying to accomplish? But we don't want to drive a lot of investment decisions from fear, because that's how a lot of money can be lost.
Now I want to ask you just a real quick question about that. And I'm not asking for your opinion about whether somebody should do this or not, or invest a lot in this area, but you hear on commercials all the time about take your money and put it into various hard assets, different kinds of metals, and take your money out of the market because of its volatility and put it into something safe like hard assets again. Do you have any perspective, historical perspective, about can hard assets, can they go up and down too? I mean, if a person invests in a certain type of metal, can they, does it keep going this way, or does it have the volatility maybe that the stock market even has?
Well, that's a good point, Tom, and absolutely it does. If we look at commodities as a broad class of trade, there are some years they're ranked at the top amongst all the asset classes, and there's other years that they're ranked at the bottom. And there's really no way to be sure. Now, over time, when you're looking at investment returns, it's important that you look not just at the return, but to adjust for inflation as well, and then also to adjust for taxes. So the real return for an investor is not just what it made, but adjust for inflation and taxes. And when you do that, you'll find that individual stocks from companies have actually outperformed other assets. No other asset class has been able to stay ahead of inflation like stocks has. Now, of course, that doesn't mean that for any given investor you go buy all kinds of stocks. Again, it really depends. But I think what we would advise clients is to not have all the eggs in one basket. And when you're talking about assets that we would we would term as niche assets, say gold, for instance, or real estate, we would advise that really no more than 5% of your assets be in a niche asset. So I think it's good to diversify and to have these different asset classes,
great.
but then to be careful that you're, of the certainty that that particular asset class would be the one that's going to go up and be sustained, have a sustained run in the future. It's almost like baseball. There's 9 positions and the players spread themselves out in the field. So if you were certain that the ball was going to be hit to shortstop, wouldn't you then, as a manager, put all your players at the shortstop
Sure,
position?
gotcha.
But of course we
Yep,
don't,
yep.
because of course we don't know where it's going to get
Right.
hit, that we spread them out, and I think that's an apt analogy for investments as
Now,
well.
if somebody wants to get a hold of you, how can they do that?
Well, Edward Jones, and you could type in White Bear Lake, and you would find offices in your area or in your community. Type in your city in the search box at edwardjones.com would be a quick way to do that.
Do you have a phone number and an email address if somebody wants to get a hold of you?
I do. 651 is the area code, 429-0522 is the phone number, and then thomas.brand@edwardjones.com is the email address.
Thank you very much for
All right.
this interview today.
Thank you, Tom.
Yep.
All right.
It's Tom Snell, again, the director of the White Bear Area Chamber of Commerce. Your business matters.
You've been watching Your Business Matters. For more information on this program or the White Bear Area Chamber, visit www.whitebearchamber.com or call 651-429-8593.